to Market on Close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Photronics popped to their highest level since the year 2000 after its latest earnings report. So I'm joined by George Sillis, senior markets correspondent, to tell us about Photronics. So what surprised investors so much that this has shot up 45% now, George?
Yeah, I think this was a situation where there was an anticipation of a more meaningful contraction in the earnings and sales numbers. It actually came in ahead of those estimates and also raised guidance. So that's why there's a huge move today. And I'll explain some of the details in a sec, but this is an interesting company. It's certainly an overlooked stock. So it's basically a semiconductor equipment manufacturer, but what they actually make is quite unique. It's like lithographic technologies, much like ASML or AMAT. Applied Materials produce. Those are larger manufacturers. These are basically transparent quartz plates that are used for imaging electronic circuits. So it's integrated circuit manufacturing technologies, but they also make circuitry and technologies for flat panel displays and 3D printing industries as well. But one of the things about the company itself, if you look at the performance year to date, which is now over 58%, most of it's coming today. Now, they did come out with earnings which were better than estimated, not too much, but it's the guidance really was the catalyst here. But the EPS came in at 60 cents, only about 2% higher than last year, which was 59 cents. But they were expected to be down. So this is important because the estimates were 45 cents. So they beat the estimates by quite a wide margin of about 30%. And then if you look at the sales numbers, those numbers were actually down about 3%. But nonetheless, at $215 million for the quarter, it was better than the $204 million estimated. Now, the other thing is the guidance was quite meaningfully improved. The midpoint guidance now for sales was $207 million. Now they increased it to $221, and that's important because if you look at this quarter compared to the updated guidance for next quarter, that's sequential growth, and then also EPS estimates at 55 cents at the midpoint. Which is 22% higher than the previous estimate of 45 cents. So, but for this quarter and for next quarter, prior to the adjustments, they were expecting no sequential EPS growth. Now that's improved from an EPS standpoint by 22%. And typically speaking, when you adjust your guidance by a certain percent, you can see up to 2 or 3 times that magnitude and move. And that's why we're seeing such a profound, movement in this stock. Not to mention, of course, that it's easy to move this stock because it's a low market capitalization name. It's about $1.5 billion. It's not the lowest. It's not a nano cap. Sales in the trailing business or trailing 4 quarters, about $850 million. They've always been profitable, at least in the last 4 quarters, but I suggest they were expecting some sequential declines in sales and earnings, and that reversed. And that's very meaningful for sort of a price reversal, and that's why we're seeing the stock move pretty aggressively upside today.
Okay, so it's in the business of the stuff that helps make the chips, so photomasks, as it's called. I'm just wondering, what has shifted in the market that's led to this huge demand now? Because I am seeing that there are some competitors out there from the likes of China, for instance, that seems to be sort of gaining a lot of market share here in this business. But it looks like some of the demand is also tied, as far as their customers are concerned, out in Asia, places like South Korea. So I'm just wondering, why the sort of jump now in the level of demand for this company?
Well, one of the things I found out about the company is if you just go back about 4 or 5 years, the biggest customer that they had was Huawei out of China. And in fact, if you look at the breakdown of sales, just in Taiwan and China, it's 60%. And then if you include Korea and some of these sub-Asian, Southeast Asian countries, it's close to 80%. Now, only in the United States, they only generate about 60% in the USA and the rest in of course, the European markets. So I suggest the customer concentration risk was always a problem, perhaps, with the company. It may have taken some time for them to move away from Huawei as a primary customer to other Asian customers. And also, maybe semiconductor markets are tight in China and, of course, places like in Korea based on some tariffs. And, with that said, with the amelioration of some of the tariff constraints that Trump administration is looking to put forth, especially benefiting companies like NVIDIA, maybe some of the other manufacturing countries or customers outside of China or even perhaps out of Taiwan picked up demand for the business. So that could be the reason for the change, if you will, in EPS and sales. But nonetheless, I do think also, I'll point out lastly, is if you look at the short interest as a percent of free float, around 8.5%, part of this is sort of a de facto short squeeze, let's call it an unofficial one. And the other thing is the forward multiple for the business was trading around 12.5 times this year's earnings, only 11 times next year's earnings. Now, those numbers or that earnings multiple is based on essentially, contracting EPS and sales, and that looks like it's reversed today. So we're seeing a magnified move because the stock was already trading at a discount to any profitable company. Now, if they expect to be profitable and revenue growth to resume positive, that changes the equation and also changes the financial modeling, and that's why we're seeing the stock higher.
Okay, understood. Yep, trading up 45% right now, $37 and change. PLAB having a very good day, as you say, Georgia. Thanks so much for helping us out with that one. George Silas there, Senior Markets Correspondent.